The broadcast is now starting. All attendees are in listen-only mode.
Good Monday, Warriors. Dale Pinkert, welcome to the Face. Looking to have a great week. Everyone with me? Ziggy, I like that expression you used on the tweet. So Ziggy says, don't let the markets be challenging, challenge the markets. And that's what we're going to do this week. That's what we're going to learn to do for the rest of our trading careers. No more of this stuff of, oh man, I hope this one works. Okay? So King Dollar. Here we are again, dollar at new highs. If you watch the week ahead video, and I did my homework this weekend, and Grega did it. Greg is actually looking for some type of reaction in the euro. Said it could go all the way down towards 112, and pretty good bounce he's looking for if it happens. On the daily, we have divergence, but for me, so even though I watch Grega's work and everyone else's work, and here it's also line up with my work, and I usually don't buy markets that are confirming at new lows. So waves don't take that into consideration, and sometimes, this keeps me out of a trade, and I'll miss it. And you know what? I'll miss trades every day, and it's okay, because there's always another trade around the corner. I'd rather keep my discipline. And even though I'm intelligence gathering all the time, guys. You heard Blake the other day, the guy who was in the billionaire video that Blake's going to be interviewing, a good friend of his. He still calls Blake to see what he's thinking, what kind of trades he's in. So, even guys who've already made it, pick people's minds whose work they respect. So, I'm pretty happy to be part of ForexAnalytix because I get to pick Grega's brain and Blake's and Steve's and Stelios and Andre, and Amanda and Joe. I have a nice intelligence gathering circle right here. And then I bring in guests like today, Tim Reset, Twitter handle @MiniMind. Okay, so if you're a SPOO trader, you got to stick around for this, because that's all Tim trades. And especially with the volatility we've seen in the past few weeks, should be a great webinar. So even though the euro doesn't fit into my parameters, the Swiss does. So the Swiss is not confirming up here, even on the 1 hour time frame, unlike euro, right? So just a quick teaching. Okay, so the RSI structure is more bearish in the Swiss than bullish in the euro. So, I'm watching this. Also, what I think would surprise a lot of people with the strength of the dollar here is at the end, it's only up 5 pips on the day after making new highs, back above the wedge, now back inside the wedge. So there's some early indications that, perhaps the dollar could weaken. You also want to look at what's making new lows. Cable's not making new lows, right? It's come off. It's under pressure today, but it's not making new lows. I'd bet this is some type of fib retracement. So the relative strength between euro and pound, obviously, right? So pound's probably a better buy because it's not making new lows like euro. So this is the way I look at things. Is it complicated? Do you have to be a rocket scientist to look at a candlestick chart and see whether or not one market is making a new low and another one is holding a fib retracement? No, it only takes screen time. And after a while, seeing how all the pieces of the jigsaw puzzle kind of fit together, even though at times correlations break apart, but normally, it gives you a pretty good guideline because it's all about our trade selection. Okay, like a singer, song choice, trader, trade selection. So I see that happening in the markets. Pretty surprised dollar strength isn't having more of a deleterious effect in the stock indexes, but it's early. I'm not 100% convinced this is a high in the S&Ps here. This was a pretty good run. We're back at support here. Perhaps it makes another run. I know this is a NASDAQ, which is a weak sister. But see how the S&Ps, again, just looking at S&Ps, NAS, and Dow, right? So you see which one is showing the most relative strength, and so far it still is the Dow. Okay, one's underneath moving average, all the moving averages, or there you go, underneath them all, both the 50 and 200. S&P in between, coiling in between the moving averages, and look at the Dow. So we talked about it last week, people gravitating towards the Dow. They've discovered it's a better flight to safety trade when they're rotating than the FANGs were a month ago. Okay, and I want to talk about, what our mission is here. I know everyone comes in here. What do you have to lose to be here? Right? It's free. But, it's invaluable. Good morning, Jose. Because you know what we are besides traders and analysts? We're encouragers and strengtheners for you guys. As you are for us by showing up and showing you appreciate our work and subscribing to our service. But there are reasons why a trader like Blake will say, oh yeah, I tried to short the yen. It was like a beach ball. It didn't work for me. So that's to encourage you that even professional traders aren't perfect and aren't always right. And it's how they manage things when they're not right. Or Blake will say, yeah, I should have stayed in the Mexican peso. I left a lot of money on the table. So that everyone does that. Okay, everyone does that once in a while. So, let what we do encourage you. Okay, and not just, when we're right, but that we could be wrong too. And how are we strengtheners? We're strengtheners by, Steve Volge going through the board and giving technical reasons. And if you follow, and if you're really hungry about learning, you'll go back and watch this video, even though you've attended, as a teaching tool every day. And you're going to pick up nuggets from that. So ForexAnalytix, before I came here, this was always my mission statement. It continues to this day, is to build up and edify traders every day. And that's what we do. Okay, so I know it's a day after Veterans Day, but I'd like to thank Blake for his service as a veteran, and all of you in the audience that had the courage and commitment to do what most of us don't, including myself. So happy Veterans Day to you guys, and I'm going to turn it over to our platoon leader, Captain Blake Morrow. Take the stage.
Good morning. Good morning. Thank you very much. That's very nice of you. Good morning.
Hi, buddy.
By the way, I saw my kids went and stayed the night over at a friend's house. So my wife and I had an opportunity to go see a movie last night, and spend some one-on-one time together. And we saw A Star Is Born. I thought about you when I saw that movie. It was
you like
really,
that? Huh? I didn't see it yet.
Really good. I won't spoil it for you, but I mean,
right.
They've made it 3 other times, so it's the same story. But it was really, really good. And I thought about you because you're, such a great, such a great voice. It's you're going to really enjoy the movie. It was well done.
Thank you, buddy.
So I, we got up this morning. Well, I got up this morning to the euro breaking lower through 113, and that's to me is a big deal. I was thinking, it's Veterans Day. It's today's the observed Veterans Day, even though Veterans Day was yesterday. It's a bank holiday for today. So, I was thinking I was going to get up and, not a lot was going to happen. But obviously the euro broke down last night, and you can see it, crack through support. Now, the question is, how far are we going to go? And, I did I'm a little offended. You're like, oh, I watched Greg's weekend video, but you don't watch mine, so I get it. He's,
I
he's
do too.
European, much better looking. I get it. So, no, I watched his video as well, and he was looking for a euro for another push lower, but not a big push. And it has moved lower. Now the question is, how far are we going to go?
Right.
This euro dollar to me looks like we are going to at least the 618 retracement, which it comes in, below 112. I mean, it comes down to 111, roughly 111.90, 111.80. So if you look at the euro longer term, you look at the lows that we set back in December of 2016 to the highs here of this year, that 618 comes in at 111 and change. So 111, 70 or 80. That looks like where we're going, at least initially. Daily sentiment is a little oversold. The dollar looks, oversold or overbought, I guess. Euro looks oversold on an intraday basis, but that, just because it's oversold doesn't mean it's going to, it can't continue to go lower. I mean,
correct.
We know that it can. And if you look at the euro daily chart, you can make the argument right now, like, okay,
108.
Well, yeah, you could actually argue it's going to go a lot lower than where it is currently. But, you could say, well, the relative strength is divergent, so why is it going to continue lower? The fact of the matter is, and sorry, my allergies are horrible this morning, just absolutely horrible the last couple of days. It's been ridiculous. I haven't taken my allergy medicine either. I try to take it here in the next couple hours so it can last me throughout the course of the day, or my evenings are just a complete train wreck. But anyway, we can hit 112 very easily, and relative strength on a daily basis isn't oversold. And even if we stay divergent where we don't hit this, RSI down here, that the lows that we had in May, we could trade down at 110 relative strength to make it towards these lows over here and match them, but still move lower. I mean, it's not, it may be divergent right now, but that doesn't stop anything, right? This was you have to realize this is a big breakdown where we're at right now. I actually, I shorted some at 72 this morning, just a little while ago. I think we got a bear flag pattern on an hourly, so you can do this.
Nice.
A
divergence on a daily could make you broke. If you look at divergence if you look at the 1 and the 4, you have no divergence.
Yeah, I mean, I mean, we have confirmed moves here. So, I mean, it looks like it's going to move lower, and the market is the risk off. Let's go back to like the S&P. So the S&P here, stopped at the 618. We're reversing. We're coming back down the 200-day moving average. If the market continues in a risk off fashion, which, you think about the midterm elections, and you think about, how complicated it's going to get for the presidency. The risk is that his rhetoric is going to increase. His nasty rhetoric towards China is going to increase as he continues to invigorate his base about being a hardliner, and he's probably not going to be nice for the next couple of years with China. He's really,
I don't want to be political, Blake, but if he's such a tough guy, why couldn't he go out in a drizzle for the celebration of the World War I thing? He canceled because of it. It was raining out. Come on, man.
I don't know, man.
Come on, man. Like they do in football.
I know. Come on, man.
Yeah. All right, buddy.
But if he does take a harder line towards China, which it looks like he's going to do, and you can see all the the headlines that are coming out this morning, just like recently, just a few moments ago, Trump administration planning on export controls on China, IP theft, intellectual property theft. I mean, he's going to take a tougher stance and try to just get his base going. It's not going to be easy, and futures are probably going to come lower. And really, conventional wisdom will tell you, if we continue down the path of having a trade war with China, it's going to strengthen the dollar, and the dollar's. So you go look at the dollar index and you're like, okay, well, the dollar index is near at 618 here at 98, but very easily the dollar could be trading back at 100 without much of an issue. And, and that's not even taking out those recent highs. So the risk, I think, right now is the dollar continues to strengthen, and we see the euro down at least at 112, but I could see a lot lower prices. I don't think you want to stand in the way of the euro today, and probably with the euro budget, Italian budget issues surfacing, as Paul Franco talked about this morning. Paulie talked about this morning. If you are a ForexAnalytix subscriber, remember there is a private webinar before this webinar. Paulie goes through all the key levels and support and resistance levels, and you got to listen into Paulie's great review, especially when it's like me. I just woke up and I'm like, I listen to him so I can get my bearings straight. You guys have to do that as well if you can. But anyway, like I said, the euro looks like we're going at least below 112, if not towards 110 or maybe even 108. I mean, these are all realistic expectations for the euro moving forward. So the fact of the matter is, today, as long as we stay below 113, you have to be bearish the euro. I mean, could we end up getting a false breakdown? Sure. I mean, do we have any data that's going to point us in that direction today? No. That's the problem, right? With that's the problem with the dollar at this point. We don't have anything on the docket that's really going to reverse course of the euro or the dollar. I mean, the only thing right now that could really reverse the dollar is that Donald Trump starts talking down the dollar, which that is a risk. How's that not a risk? I mean, Donald Trump's he's no dummy. He's looking around and going, wow, this dollar is getting too strong, which is going to really work against my rhetoric of the trade rhetoric against China. You know what I mean? Or maybe not, because if he continues with the strong rhetoric, and he knows the dollar is losing strength, that loss of dollar strength while he's talking a tough game, he knows that it prolongs the life of the countries that matter the most, which is China and Europe, more than likely. So if he continues to talk about trade and take that hard line stance, which I'm assuming he's going to, maybe the stronger dollar he knows is working against him, but it allows him to, like I said, prolong this fight, and knowingly so. If that makes any sense. I know it doesn't sound, if you really want to put the nails into China, like immediately, you would really talk down the dollar and talk hard, take a hard line on trade. But maybe he wants this fight to drag out because he wants it to drag out for a while, which makes sense. I mean, that to me would make sense. But anyway, so the euro has cracked. The point I wanted to make this morning before I hand it over to Steve and Stelios is that the euro is cracking lower. The cable looks weak. I mean, what a rejection in the cable, above 131. And Stelios probably has a better beat on what's happening with the eurozone. The Aussie, big rejection. I tried to play this thing on the long side last week, and I tried to buy it as it dipped back into this channel support, and we just broke right back down into the channel. So that's pretty scary if you're long the Aussie. The Kiwi is holding up really well. The Kiwi actually bounced off the bottom of the support zone, but you know, with risk aversion picking up, I don't know if that's, you know, if the right trade is to be long the Kiwi right now either. If you look at like longer term on the Kiwi, we are below.
A few fibs there.
Well, yeah, there are. That's more intraday, but you'll notice we are below this this broken trend line still, which comes in at, you know, let's just say 68.50. You know, we're 100 pips below there, and so I guess as long as we stay below this, you know, you can see the dotted line here. As long as we stay below that dotted line, I have a hard time being long the Kiwi. Now, does that mean I want to short it right now? I know the euro is broken down, so I'd rather play the euro on the short side. But that worries me if I was long. That would worry me. The dollar Canadian. Let's talk about the Canadian for a minute. Now, the dollar Canadian broke out of this
Before you go today, Blake, will you cover
Yeah.
the beach ball and see if you have any new information on it?
Yeah,
You know what I'm talking about, right? The beach
you
ball.
know, you got another beach ball here.
Yeah.
I mean, how about the dollar Canadian? I mean,
It
the
is.
dollar Canadian.
Can't keep a good loony down, man.
They're going to be raising rates. They are raising rates. You've got stronger Canadian data, yet the dollar Canadian popped above the 618 retracement, and frankly, it looks like we're going to at least 133, if not longer or higher. And keeping in mind that we are above a multi-year trend line here, and we even, you know, post NAFTA or USMCA agreement,
Nice tag.
we were unable. Yeah, we tagged that broken trend line and reversed. It was unable to go lower. So if it doesn't go lower, it probably got only one other direction to go, right? It's higher. And so that's what's been happening with the dollar Canadian. Now, going back to the dollar yen, this is the one that we talk about the beach ball. However, you know, look at futures this morning. Futures are getting decimated. They are just absolutely, over the last 25 minutes, we've just, you know, just come under really, you know, a lot of pressure. Look at the S&P. So as the S&P continues to break down, I would think it's going to eventually work its way into the dollar yen. But, you know, so what? S&P drops 20 points, the dollar yen drops to 113. Do you really want to be short the dollar yen when it gets to this trend line? I don't know. I mean, the thing hasn't really broken down either. So it's a tough trade. I don't know how to trade the dollar yen right now. I mean, I know we completed this double bottom. Yeah, and we've come up to a lot of resistance. It really is difficult for me to go out and buy the dollar yen, knowing that futures are moving lower. So we got that. You know what? You know, it's for me. It's like it goes so against the grain to what I'm, you know, correlation wise, what I'm used to doing, that I have a hard time buying the dollar yen. But who's to say that the dollar yen can't excuse me, continue to go higher? I mean, the thing has been resilient as all get out. So, you know, I don't know what to do with the dollar yen at this point. And that's coming from someone who tried to short it down here as it broke down, and it didn't, and it popped right back up again. So, for me, I'm better off leaving it alone because I don't understand the move. I don't understand why it's doing what it's doing at this moment in time. So anyway, you know, because if stocks do end up bouncing for whatever reason, you know, is that the cue that takes the dollar yen above these highs? It could, you know, because if we clear 114.50, I mean, we do have, you can arguably say, you know, some sort of, you know, big inverted head and shoulder pattern, even though I don't like playing, you know, I don't like playing them like that, but a lot of people do. I play, you know, head and shoulder patterns as key reversals off of big trends, higher or lower. But a lot of people are going to see this breakout here above 114.50 is extremely bullish, which could take us, you know, towards the, you know, ultimately 120, 122 level. So, you know, do I want to short it? No, I don't. Not at this point. You know, I don't. But do I want to be long? Well, it's scary when futures are coming down. So it's a tough tough instrument to trade at this stage in the game, in my opinion. One of the other things I should point out before I turn it over to Steve and Stelios as well is look at precious metals. I mean, you know, here's silver just getting destroyed. You know, we're near our lows of the session right now. Silver is just getting demolished. Gold, I mean, is rolled over again. I mean, where's gold going here? I mean, you know, we got some trend line support that we might tag here at, you know, 111.95, but gold ultimately looks extremely weak, and like I said, silver looks weak as well. Silver looks like we're going to hit new trend lows, and that's only that only will strengthen the dollar. So if precious metals continue to sell off, that's only going to be a tailwind for the U.S. dollar as the U.S. dollar is breaking higher. So you know, that's something we got to obviously keep an eye on, especially if you're out there trying to bottom pick the euro. I mean, to me, it looks like the euro dollar is on its way towards, you know, at least 111.90, but probably closer to 110 or maybe even below that. So in all actuality. So with that being said, I'll pass it over to my colleagues. And by the way, Stelios, good morning.
Good morning.
Hey, and Steve.
Good morning, mate.
Good morning. Stelios has put together an awesome Euro blog, which I'm excited for all of you guys and gals to read. It is going to be on our blog site. And by the way, don't forget that we post a chart of the day on our blog every single day. So and there wasn't one yesterday. That was my fault.
That was a great one on the S&P showing the 61.8 retrace before it came off again.
Yeah, you know, I just try to point out something, you know, significant that's happening, and you know, I'm sure some of you can guess what my chart of the day is going to be today. But you know, it's just to have some commentary and something for you guys to look at every single day to say, you know, this should be on my radar right now. And it's not always going to be currencies. Yeah, the other day, like on Wednesday or so, it was the S&P at the 618. But make sure you are on the lookout for Stelios's Euro post and about the Eurozone. I think it's great. And from you know, not stealing your thunder, Stelios, it's not rainbows and unicorns in the Eurozone, is it?
Well, it definitely doesn't look like it so far. The interesting thing is that I think most people in the market, when the whole Italian situation started, they were probably like, yeah, there's going to be some kind of, you know, they're going to back down or something's going to happen. But, you know, Di Maio, one of the leader of one of the two governing parties who have the coalition, he said today that respecting EU limits on a budget is suicide. So that, you know, that's pretty punchy as a statement. So it looks like the Italians are not going to back down. And to be fair to them, they've always said that from day one. You know, they said we're looking at, you know, 2.4% of a budget deficit. The Europeans said they wanted under 2%, and they never budged, and they're not budging. So I've said this for a few.
Yeah,
you know,
Tsipras wasn't also budging during the first 6 months of his tenure, but you know,
true.
We all know how that ended, right?
That is true. I think I think the Italians have a little bit more bargaining power as a country and as a size of the economy and their debt. So you're absolutely right. You know, it could be in the end.
So ultimately, what's going to happen? What do you think?
Well, that's a question, because the Italians, they say, oh, we want to aim for a higher budget deficit, which they think will help their economy turn a corner. You know, so the government spends money, and then the economy gets kickstarted, and then they can reduce the deficit going forward. But the question is, you know, you still have to fund this, and as the market loses confidence in your country and your economy, what happens? Your rate of borrowing money goes up. So
yeah,
that's exactly,
usual Keynesian, worthless. I'm not going to say the word. It's a four-letter word that starts from S. And I'm saying that because the fun part is that everybody now globally has become a Keynesian, with the only problem being the following. At least Keynes was a proponent of the fact that governments should be running budget deficits when actually they're during a recession to stimulate the economy. But at least was saying that they should be running trade surpluses when the economy is doing well and when they're growing. So they actually can use those surpluses during a rainy day. Now, what we're doing is that during good times, everybody's a Keynesian. So they, in essence, they want to run budget deficits. And when we have rainy days and recessions, everybody is a Keynesian squared. So, it makes no sense, because that's something that can only end in disaster, because, now everybody's a proponent of running deficits, smaller deficits, but deficits when theoretically speaking,
all
we're in
the
expansion.
time.
And bigger deficits when we're in a recession. And who's going to pay for all that at the end of the day? At some point, there is the end of the road for that. You know what I mean?
Soros will bail out Italy. Hey, Stelios, you know what really struck me with what you said just now? There's an expression, don't owe the bank a little bit, because then they'll call the loan. But if you're the bank is into you big time, they're going to work with you. So, your point of Italy being bigger than Greece, they do have more leverage, don't they?
Yeah, absolutely. Greece was 300 odd billion, and it's Italy's almost 2.5 trillion.
Yeah,
so,
exactly.
At the end of the day, and at the end of the day, the markets will decide what level you can borrow money at. And Italy, at the moment, they can borrow at decent levels, but we saw what happened with Greece. As soon as confidence goes, a country's ability to borrow through the markets could disappear. And then what happens? Now, that's a scary thing. And like Steve said, these things should be only in case of, let's say, emergency. You're in recession, you're in deep recession. You have to start spending as a country, as a government, to stimulate growth. Now, it's okay. The Eurozone and Italy are not, flying, but still, they're not in recession. So, it's and also, Steve, I wanted to point out the other thing. When do we have all these cases like Italy? It's usually after elections, right? And then the new government comes in.
It's the tyranny. It's the tyranny of democracy, and that comes obviously from a person me very well, that I'm absolutely pro-democracy. So it's not that I'm advocating for something else, but I'm saying the tyranny of democracy, because the problem is that we've accumulated globally. The vast majority of politicians are more or less populists. So what happens is, pre-elections, everybody's promising something for nothing to almost everybody. And even the party that is against that, when they come into power, they don't want to take the political cost of removing what has now been given and is considered something granted to people, because they don't want to take the political cost. So what happens is that entitlements, one way or another, pile up on top of each other, unfunded liabilities pile up on top of each other, and there is no end to that. But at some point, it's going to end up abruptly, right?
Yes, absolutely. So that's what's happening with Italy at the moment, and the market clearly not liking it.
All right, guys. Hey, I'm sorry. I'm going to cut out. I just want to say, have a great day, and happy Veterans Day to you two guys too.
Yeah, you do, Blake, and you are a veteran. So as the Americans say, thank you for your service.
Thank you. All right, guys. Have a great trading day.
You too, Blake.
Thanks.
See you later. Bye, mate.
So two more little things I wanted to touch on before you start, Steve.
Absolutely.
We had some turmoil in the UK again. So it seems that there was supposed to be a Brexit summit at the end of this month, but there seem to be a lot of problems still persisting. The Irish border being the big one. And now it's looking, well, from what we're reading, it's looking unlikely that this November Brexit summit will happen, which means that there's one more in December. which then will be cutting it very close, because remember, if there is a deal, it has to be passed through Parliament, and that takes time. So it seems like we're cutting it very close if there's going to be some kind of deal struck. Now, there's that was one of the problems that we had, and also we had one of the conservative let's say pro EU deal members of Parliament, who is now basically changing tack and saying, I'm not supporting it as it stands. So already the majority, whatever majority May has, was slim. Now it's getting even slimmer. So it's not looking great for the UK.
And that's why we also had Thursday and Friday were kind of horrific in the cable, and we gapped lower. We never even closed the gap that we had on Sunday's open, and big rejection from the 78.6 here in the cable. And now I see possibly this as a triangle, and I think that there is a very, very decent chance that we're going to see new lows in the cable. I don't know what's going to happen later after that, but the cable definitely doesn't look good. And the only bullish case scenario from a technical perspective here would be a double bottom. But in order for something like that to get triggered, we would need to see a break above 133. So as I've said, plenty of times during the past at least couple of months, as long as we remain below 133, everything is noise, and the chances of a continuation lower, because you have to respect the trend, are always significant. And as you said, a lot of things can now go wrong in the short to medium term, and it can very, very easily be that we're going to see new lows in the cable before some type of a bigger reaction to the upside if we are to combine fundamentals
especially with your bullish dollar case, Steve, of 99.
Yeah, speaking of which, coach, I sent and Stelio, I'm going to come back to you. I sent actually 2-3 updates today. One of them, if we go down to the 4-hour chart, one of them, because it's very correlated to the DXY, is this, and I think I got that quite nicely. I actually sent an update to our members that we were testing. This is the Euro USD on a 4-hour scale. We were testing this confluence of the 127% extension and this channel's support. And if you see on the daily chart, this is also at the same time, it was the descending channel's resistance extension. So in essence, this was a triple confluence of supports. And so far, we seem to be having a reaction from that. Of course, as I mentioned in my update, as long as we remain above this previous low at 113, there is a decent chance that we're just going to rebound and get rejected from there. We need to see levels above 113 to then start talking about the possibility of a false break lower. But until then, I was expecting a reaction from here. And so far, the Euro USD has stalled there. And now if we switch to the DXY, since you mentioned it, I mentioned about the possibility of this being an ascending triangle, and you can see it both on the 4-hour chart, but you can also see here on the daily chart. Here it is on the daily. So this being an ascending triangle, we seem to have broken above it. I think that even if we come back to retest like the 97.20 area, there is still a decent chance that we're going to see one more thrust higher. Nice confluence of resistances at 97.85. It's a 61.8 from the 1-year bearish trend that we had. It's also the 127% extension of this little correction that we had here. But I do think that this confluence of resistances, that horizontal resistance area, and the 161.8% extension of this corrective move lower is also an attractive target, as you said, and that's almost at 99. So yeah, it does look like a decent possibility, especially if we close today. If we see a daily closing on a daily closing basis, a confirmation of those breakouts in the euro and the dollar index, I do think that there is a decent probability that we are headed there.
All right, Steve, I just wanted to let Tim Reset, our guest, know that I see him, and we'll be starting at the top of the hour. Go ahead, guys. Yeah. Thank you.
So, Stelio, what was the next subject?
Just one more thing, actually, and that was about crude. where, crude, we were talking about on Friday, had 10 consecutive down days, which was a record. And, we did talk about what might happen. And, funny enough, in yesterday, the Saudis talked about cutting production. I think they indicated 500,000 barrels. But basically, we're at the point where, the market is aware that now something might be done from the Saudis and the OPEC, the OPEC producers in general. And that's brought some strength to crude today. Now, will it continue? We don't know. But, it's something that just worth bearing in mind.
Speaking of crude, as I said on the webinar, and people on the chat room know what I'm doing when I'm doing it 99 out of 100 times, I had accumulated a position in crude with my cost average being below 60.40. So I'm now in the money. I've already traded my stop loss just below Friday's lows. This is what we drew several days ago. This is, more or less an indication of the price action that I'm expecting. So I'm expecting a rebound from here. And I like the reaction that I see now. I like the fact that we found a low at this confluence of supports on Friday. And my idea and my viewpoint on seasonality, I like to see a low at the end of a week and, a low at the beginning of the week. So, why not, today's opening price? I wouldn't be surprised if that ends up being the low of the whole week. Of course, for those that are looking for a rebound in crude, we're not out of the woods yet, because we haven't yet broken out of this descending channel support. But I felt really confident and accumulating that long position in crude. My second long, I was actually triggered almost at the lows. So I think there is a very decent chance. What I'm looking for is a retest of this. At least, my first target is a retest of the bottom of this horizontal support resistance area at 63.60. So I'm going to be more than happy. That's going to be it's going to be $3.30 of a profit for me, and I'm going to be more than happy to see crude making it up there. And I think there is a decent chance that can happen. This move in crude was huge. I mean, it came too fast, too much, too soon. And, it's definitely oversold in the vast majority of the time frames. And as I said, this is a nice confluence of supports. And, even just a single relief rally can easily cover $3-4 of upside. So I think that this looks very decent. Now, speaking of which, and let's go to correlated instruments. So far, we're seeing a nice rebound in crude, but USD CAD remains quite strong. And, this is another indication that you shouldn't probably try to fight this breakout because, with the rebound of crude, one would expect that USD CAD, could have been trading much softer than it does so far today. But it isn't. So I do think that we're going to make it to 133. If not higher, I think it's a very decent likelihood that we're even going to make it up to 136. Eventually, I had been talking about the potential for this breakout for some time now. And, for those of you that actually care and monitor USD NOK, I wrote about that in the chat room earlier today when we were actually at the highs of the day. Keep in mind, this is USD NOK. As you see, USD NOK was testing once again earlier today. Now it has pulled back a little bit. Major resistance. You can see this is a long-term consolidation pattern with very clearly corrective characteristics. I mean, this has been already going on. I mean, this corrective formation has been taking place for almost three and a half years, almost a little bit less than 3.5 years. And the daily close above the previous high here. And obviously, this is also going to be a daily close above the descending channels resistance. I think is going to constitute a major bullish breakout for the USD NOK. And from a technical perspective, you should expect that this should eventually lead to new highs. So I expect that this should eventually push through the previous high that we had at the 9 handle. So we should see the 9 handle print again. We're not there yet. I mean, we're testing resistance and we seem to be holding for now. But in all honesty, technical analysis and experience say that, given the fact that we came, the main trend was higher, the impulse was higher, and this has clearly corrective characteristics as a move, you would eventually anyhow expect the resolution from this descending channel to come to the upside. So I would really not be surprised to see that happening, despite my bullish viewpoint having to do with the NOK, as a longer term thesis. But in the short to medium term, I have to respect the technical viewpoint, and that says that a break higher for one more push to the upside is a very possible outcome. Now, having to do with US indices, there's not much I can say here. Obviously, we got rejected from the 61.8. I've started accumulating a position short here as well. Although I have to say, and as you see, this is what I drew here, I wouldn't be surprised if this move lower proved to be a corrective move, the first move higher, and then we saw one more push to the upside. Actually, I would love to see something like that, because I strongly believe that the correction lower, if it's a correction and it's not a new trend to the downside, but you can never count on that. You should always respect the longer term trend, and that remains to the upside until proven otherwise. But anyhow, I believe that even if this is a correction lower, it's not over yet. And I would love to get the ability to build even a bigger position by seeing prices move higher towards this confluence of resistances a little bit below 28.70. So I'm really hoping that this is just a pullback and we see another push to the upside before then seeing either an attempt to retest the lows or even a lower low. I'm not so enthusiastic about the move lower. I'm not convinced that this is the beginning of another push towards new lows, although it is a possibility, and that's why I preferred to start building a position, although I believe there is a higher rebound, because there is always the possibility that you're not going to get the entry or the price is rebounding as much as you wish, so you'd rather have something than nothing. This is my general viewpoint having to do with all the US stock indices. Okay, now if we switch to some of the European ones, I made it very clear. I wrote it in the end of the week analysis that nothing changes having to do with my outlook in the DAX. The DAX has triggered a massive head and shoulders formation. So this type of a rebound that we saw higher, personally, I didn't even care about it, because it's very simple from a technical perspective. We had a major development. That development hasn't been invalidated, and that keeps me bearish. And we're seeing a reaction lower today. So far, we're seeing a bearish engulfing. This is quite a bearish candlestick, and this opens, in my opinion, the potential for more downside towards the next objective, which is at 10,800. More or less the same applies to FTSE. This can be a consolidation. We might see another push higher towards 7,300, but I'm not convinced that the move lower is over here either. And this is the Nikkei. If you remember, I kept mentioning the Nikkei. I had this trend line on my chart, since a long time ago, and I said that, listen, since we actually penetrated through the 22,000, I wouldn't find it impossible if the rejection price ended up being this confluence of resistances of this trend line and the 50% fib. We didn't exactly make it there. We almost made it there. Now we seem to be getting rejected from there. So, I wouldn't be surprised if there was a lot more upside from here. Nikkei, that doesn't look that good. I mean, we had a false break high to 27-year highs, and then the move lower seems quite strong. Now we're getting rejected from this trend line. I know that the USD yen so far isn't following, but on the other hand, keep in mind that, as Blake said, I don't want to be short the USD yen, but on the other hand, I don't even want to be long the USD yen, because, USD yen also seems to be in something like an ascending wedge. And if it fails at any point from this trend line support, I think then you should be looking for more weakness towards at least the 109.77 low, if not lower from there. So, personally, I don't want to be doing anything with it. I'm not yet convinced that it's moving much higher from here, but it can be doing so. Its traditional correlations, as Blake mentioned, they have broken down. It seems to be following more yields and completely ignoring what's happening with risk on occasion. Usually that wasn't the case. It would follow more what's happening with risk. Of course, it was always sensitive, having to do with rates, but it also, used to follow what risk was doing. Now it seems to be less the case.
Steve, it's barely following rates too. Because if you pull up the yield chart from last week, we had
now.
Rates softened pretty good, and I know because I was short yen, and the yen hardly came off. So even the thing it's a Siamese twin with, it's having less of a reaction than yields.
Yeah, I agree with you. And there is a bearish case scenario here with rates. Of course, the scenario that we should maintain as our main one for the time being is the fact that this might have easily been. It seems like an ABC correction. This might have easily been like another bull flag, and we might retest it and then move higher towards the 161.8% extension. But there is also the potential of a double top here. But in order for us to even mention that, we would need to see a move below 306 in the 10-year yields. We already have some very significant RSI divergence. So this gives some points to the potential of a rejection here in yields. But personally, I would want to see more evidence of that. But one thing is for sure. If risk keeps on being on the back foot, and this proves to be some kind of a double top in rates, USD yen will have nothing to keep it up, nothing. So I think that despite some obvious divergences and some obvious let's say decorrelation from its usual factors that lead it or either higher or lower, I do think that it's almost impossible if yields turn lower at the same time risk does not pick up. I think it's impossible for the USD yen to stay afloat. So I think that it's going to eventually break down. That's why I would be very, very careful being long USD yen. So I have no position that I don't intend to have one soon. But if I was forced to have one, I think I would still choose to be short if I was forced, as I said, right?
Steve, one little note before you continue. Sterling is well off its lows now because Barnier said, you saw that, right? That the main elements of the Brexit text is ready. And
no. I didn't actually see what was the
chief EU negotiator Barnier said that the main elements of the Brexit text are ready and could be given to UK Parliament tomorrow, Tuesday. Yeah, so tomorrow. So just the usual comments either side pushing sterling one way or another.
And by the way, sterling literally unchanged on the day at the moment. So
looks like it wants to at least fill the gap. And couldn't that be a higher low, Steve? I was looking at euro making new low, pound higher low.
Of course it can. Of course it can. Of course it can. But there is still a lot left in the day, right? So I think this, Gregor has said that many times. Very often, you see during Asia hours on Mondays a push towards the wrong direction. So you should be very, very careful in interpreting moves that we see early on Mondays. So especially on Monday, we should give more time for the markets to develop and show us what they really want to see and what they really want to do. So for me, especially today's daily close is going to be more important than, let's say, if it was a Tuesday or a Wednesday or a Thursday or a Friday, right? Because it's a Monday, because we've already seen some strong moves and gaps. And I want to see if we can trust those, or if perhaps those were just, low liquidity moves to catch people off guard and perhaps just trigger some stop losses before we actually move to the other direction. And the same applies to the DXY. Perhaps this break above the 97.20 area might prove to be a false one, right? So let's give it a little bit of a time and see how the day is going to close. I think today's daily closes are going to be very important for the rest of the week, if not for the rest of the days of the month, which still has quite a lot to move.
Steve, you disproved Tom Petty's theory. You know what Tom Petty's theory is?
No.
The waiting is the hardest part. And I've never seen anyone be more patient about waiting than you.
But
for confirmation.
Waiting, but it's actually very easy, because waiting is what makes you money, right?
Yeah.
Because it's what prevents you from losing money. And this is, I mean, once
that's a pearl.
Once you taste the benefits of being patient in trading, you can never go back to being impatient. You understand what I mean?
Yeah, FOMO.
Yeah, I mean, because simply.
So what? So what if you miss something because you're patient?
Yeah, and on occasion you might jump the gun a little bit, but your main thesis of being patient never changes. For example, that's an example. The second time we broke below this, the USD SEC. I opened 1/4 of a position, just 1/4 of a position. I knew that the day hadn't closed, and there was a potential that this would be a false break. That's why I opened just 1/4 of a position, and I still actually own that. So that was actually jumping the gun, like not waiting. But I did it knowing the risks, and that's why I just tipped my toe with a very, very, very small position. You know what I mean? On occasion,
it also makes you pay attention because you cover so many things. I'll bet that you pay a little bit more attention to things you have even a small position on than instruments that you're flat.
Yes, of course. And sometimes you break your rule, but you know that you're breaking your rule. And you know that you're not going to make a rule of breaking your rule. You understand what I mean? Because it's now very clear to you what is the rule and what is the exception. And that's the most important thing.
Great mentoring.
Oh, my pleasure.
Sometimes when you talk about the economy, I feel like I'm in a college lecture hall.
But you would
that's probably from your days when you were teaching economics at Oxford.
Yeah, you would be very, very mistaken, because actually, coincidentally, we had a conversation early today in the chat room, and as I was explaining that, I was very passionate about economics, so I took a lot of economic courses when I was in university, because I have a major in finance and I have another major in business administration. So for both of my majors, I actually took a lot of courses in economics. And for some time, I was actually considering a major in economics as well. And, I loved it.
Yeah,
and then yes, but I will explain. And then I realized that the more courses I did in university on economics, the more distorted my idea about the economy was. Because the vast majority of the things that they teach you in theoretical economics in university are really wrong, honestly. Very, very, very wrong. Very wrong. And a lot of people
no wonder the globe is in this situation.
Yeah, exactly. But that's exactly, it's the self-fulfilling prophecy. It's because you have, for example, central banks trying, for example, to excuse their course of action by their models, etc., and
Phillips curve,
exactly, and whatever else. They then, in essence, this passes on to economic theory as a given, and many of those things are actually the exact opposite of how an economy works. And then you see it in action, and you're like, oh my God! If I had actually not been ever taught any economics, I would have probably understood much sooner. I would have resisted a lot less understanding how the economy really works. You understand what I mean?
Sure. Because so did Jimi Hendrix when he wrote Voodoo Child.
Because initially you don't want to go against what you've been taught, what you've been giving exams on, what your professors, your well-esteemed professors have been teaching you, etc., etc. So you're like, nah, this can't be like that. I mean, must be my idea. And then, you see more people that actually understand how the economy works, and they come to the same conclusions. And then you see how the economy behaves on occasions. And then you understand that, what your logic was telling you was actually how things are, and what theory tells you many times is just what some people have written in a textbook, hoping that this is actually going to work in the long term, but it's not.
I once had an essay question, Steve, in college, and the professor asked, "What is worse, ignorance or apathy?" And I responded, "I don't know, and I don't care." I got an A. Anyway, great. Another great rundown of the board, partner.
Okay, I promise, because we have some questions that tomorrow I'll cover all the exotics, Nifty, etc. So tomorrow, don't worry, I'm going to go through all of those. So enjoy the interview, and we'll see you later on. Bye bye.
And remember that, Steve. I don't know and I don't care. All right. So, Tim, I see you, buddy. I'm really looking forward to talking to you today. I'm going to make you the presenter. Perhaps you brought some charts. I've been to your website. Welcome to Face, Tim Reset at eMiniMind.
Yeah, good morning. Great to be here.
Hey, Tim. Very nice to meet you.
Likewise.
Okay. Do you have a screen to share, or you want me to show your website?
Yeah, I can pull up my charts here.
Okay, buddy. So I've been to your website. Looks like you have some type of relationship with Danny at Top Step.
Yeah.
I like the Strat. I like the Strat. Nice violin. Good logo. Trading's like good music, isn't it?
Yeah, absolutely.
Even music is geometry.
Yes, absolutely. I'm a Chicago native myself, so I know some of the guys over there at Top Step, and
where'd you go to high school?
Up in Antioch, way north, up on the Wisconsin border. Yep.
Oh, okay. All right. Near Kenosha?
Yep, that's right.
Okay. I grew up in Chicago. I went to Niles North, and then went to Northern Illinois University.
Yeah, very good.
Yeah, I couldn't take the winters, and I left for the West Coast when I was 23 for not margin calls, but women in marginal clothes.
Well, I'm out in Scottsdale, Arizona now, so
okay,
kind of right there with you.
Our CEO lives out there. So Tim, being from Chicago, I know a lot of us, new people in the business, and that's how I ended up in the business. A guy signed me on to the CME floor, the real old Merc when it was above Union Station. Could you tell us a little bit about your beginnings and entree into the industry?
Yeah, I got started down at the Board of Trade, and I had a friend whose dad worked down there, and the two of us would go down there and kind of hang out in the pits at first, or around the pits, and talk to some of the guys down there. And they were encouraging and discouraging. They were very encouraging us to be traders, but not in the trading pits. Things were starting to die. This was, not starting, they were dying. This was early 2000s, so definitely well into the computerized trading world. And
the conversion of the exchange trading floor into a bowling alley.
That's right. And they, those guys on the floor, kind of put us in touch with a couple fellows who had been trading on the screen since the 80s. And they said, this is where you want to be, and kind of guided us towards the computerized world. And a lot of the guys in the pits had, machines outside of the pits at their desks, and would just kind of look at the charts and do their analysis, and then just go in the pits to put on some positions and manage some positions. And that was really about it.
The open outcry of trading against paper. A lot of guys had a very hard time making an adjustment from being floor trader when there used to be a lot of paper to trade against. You really didn't have to be right directionally in the market. All you had to do was trade the paper flow, you know, and they all knew where the stops were. And, you know, remember there used to be roars. Maybe you came into it too late. There used to be roars when they would elect a group of stops over swing highs and lows. So, yeah, a lot of traders from the open outcry days couldn't make the adjustment. I learned how to trade off the floor just being a rep, and then I went to the floor, and I didn't like the out trade risk of being a member.
Mm-hmm.
So, what did you have any mentors for certain types of technical analysis? I'm looking, you know, you use candlesticks and you have fibs up there. Who were big influences on you? Maybe they were authors, or are you completely self-taught?
I had a couple of, like I said, two fellows who were up in Lake Forest and Glenview, who had been trading mostly the ES and a few of the other indices since they were around for offering for computerized trading. And so they were pretty influential in just kind of setting a sandbox, if you will, some safety parameters on, you know, okay, if you want to learn how to trade, here are some things that you really need to make sure that you don't do, so that you don't, you know, dig yourself into a hole that you can't get out of. And
you ever blow? So because of that, you know, I talked to a lot of people. I've done almost 1,000 interviews. You ever blow up an account?
No, and I attribute it to that, you know, getting tied in with some really good traders who were able to kind of mentor myself and a buddy of mine.
I'm curious, who were they? Maybe I know them.
One fellow was Greg Schroden. They're not very public folks.
Okay. All right.
So you may not know them, and they don't. They're not very, you know, they don't do a lot of mentoring to anyone, I guess.
Okay.
They were just sort of folks that friends of friends, if you will. Yeah. So it was a really great opportunity. You know, they put us. Turned us on to things like the NYSE tick indicator, and encouraged us to, you know, keep things simple and really understand the price action, and really focus in on one market and one time frame to start, so that you could really, you know, understand the nuances and get to know the market that you're trading, and then be able to expand from there.
You know, that's a pearl, Tim. You know, do you only trade minis, E-minis?
Now I trade other things, but primarily the E-minis, a little bit of currency. I also, you know, swing trade stocks, but in terms of the day trading side of things, yeah, mostly the E-minis.
Yeah, because, you know, a lot of people have the misconception. I teach it, know one market like the back of your hand and be a master of one instead of a jack of all trades. And I use the example of guys on the floor in the old days that never had to leave the cattle pit to go trade currency or anything else. And they did pretty well just trading cattle.
Mm-hmm. Absolutely.
So, yeah. So why don't you tell us a little bit about what it's like to have an E-mini mind, especially during October?
So yeah, but
great handle, by the way, buddy. Great handle.
Yeah. I always, you know, felt like the mindset was the important thing in everything that I was kind of striving towards. I participated in a lot of kind of mastermind groups and apprenticeship programs, if you will, when I was younger. Not necessarily all trading related, but just, you know, shadowing people who had been doing what I was interested in doing and becoming for 20 years, and being able to, you know, shadow someone in that role, whether it was you know, woodworking or, landscaping or doing any sort of trade, all the way down to a skill on the computer. The same process applies. If you want to be excellent at something, you want to find someone who is excellent and sort of shadow and copy what they're doing. That makes a lot of sense. And so I felt like if I could acquire some of the, not just the intellect, but the mindset and the view, the way of looking at the markets, that I could be able to, you can develop skills and you can read books and you can learn about technical analysis and some of the other tools that I may use. But you really, if you don't have the proper mindset and approach, then none of that other stuff really matters. So that's why,
yeah, that's excellent. So you were modeling yourself. I say, surround yourself with people, traders better than you. And you were just modeling people that have already gotten to where you want to be. And you don't have to reinvent the wheel, do you? You just have to find the people that have already been there. You can't learn experience, Tim. I'm sure that even though you had all this, it's still experience as a passing of time and living through stuff. But you could shorten that by learning from the experienced. It doesn't teach you experience, but it could shorten the cycle. Did you find that?
That's exactly right. No matter how much you learn something by reading about it, watching it, seeing it done, you still need to do it for yourself and go through the motions and make some mistakes to really have it ingrained in your brain. If every entrepreneur out there knew what the journey was going to be like and how difficult it would be, nobody would start a business or go out and build some kind of company or start a venture. And so you need a little bit of that naivety. You need to be a little bit naive in some respect, but you can shortcut not the experience part, but shortcut your way to practicing the right things. And whether, if you're an athlete, there's a lot of similarities between being a high performer in anything, whether it's trading or athletics or a trade. And you want to practice the right way as much as possible. So the sooner that you can get to practicing the right things, then the better, the quicker you'll be able to master that skill.
Okay, so after the naivety goes away because you're in it, you have to replace that with, I believe, perseverance.
Yes. Yeah, that's probably the number one thing that has got me through trading. Over the years, I've seen a lot of people come and go, and I've been fortunate in a lot of ways. Not fortunate in a monetary sense, in that I was handed a bunch of money, but fortunate in that I've been given opportunities to be exposed to the trading floor and being introduced to these great trading mentors, and had the ability to follow and really continue down the path of trading without a whole lot of distractions. Whereas maybe if I came into trading when I was 45 or 50, my mind may be sort of split between trading in a family or trading in something else. And not that it can't be done with all kinds of other outside forces, but
never thought of that.
When you have a focused intellect, or when you're going through the process of learning something new, the more focused you can be and more sort of all in you can be, the quicker you'll be able to adapt and pick up on a lot of the nuances, as opposed to, you know, if you're trying to learn the violin, for example, and you're just practicing an hour a day, you know, the first 15 minutes you might just be sort of remembering what you were working on the prior day. But if you're practicing for 5, 6, 7 hours a day, it's like you're thinking about it the entire day, and you're spending a lot more time working on those specific skills that then just become second nature. And trading is a lot of the same way. You practice things consciously, you look at the markets, and then all of a sudden some of this stuff starts to become second nature and ingrained in your subconscious. And that really helps to sort of build confidence as you go.
Okay, so I see your setup here, Tim, and I've been to your website. Do you only trade for yourself, or do you have a service? Do you teach? Do you send out signals? What do you do at E-mini Mind?
So trading wise, I only trade my own money.
Okay.
When I was younger, I worked for a financial advisor, and that showed me that I wasn't really interested in trading other people's money, and I wasn't really interested in the client side, more of you know, the trading side. So yeah, I trade my own accounts at E-mini Mind. It's more about sharing my thoughts and having an outlet for communicating with other traders. You know, trading is pretty lonely at times, and it's nice to be able to throw out some ideas or share something that I'm working on and get some feedback. And so I've got a group of traders over at E-mini Mind where we kind of work through trading strategies and things together. I do a what I call a live trading room on Tuesdays, which is basically just me sharing my charts and answering questions, and just kind of having a open door to my trading room, or to my trading screen.
Do you believe in the phenomena of turnaround Tuesdays?
Just in terms of, you know, the market opening Monday and then changing direction.
Yeah.
Or turn
you
around.
Know, like normally, you know, whatever way you close on Friday, if it's strong, you normally get follow through early into the week, and a lot of reversals I've seen happen on Tuesday.
Mm-hmm. Yeah, I've found that Mondays and Fridays can be a little bit of outlier days. Tend to get a lot of gaps on Monday just because of the markets being closed over the weekend, and you have a lot of mergers and acquisitions and things like that occurring on Mondays. So Tuesday, Wednesday, Thursday, I've always noticed being the days where I trade more or have more trades.
Right.
I kind of try and ease into the week Monday, and then ease out of the week on Friday, just to kind of, you know, start on a good note and end on a good note. And so Tuesday, Wednesday, Thursday is probably where a meat of my trading occurs.
Okay. Do you is it mainly day trading, the S&Ps? Do you ever see time frames where swing trading in the S&P, or even position trading becomes compelling to you?
I don't do a lot of swing trading and overnight. I don't do really any overnight trading in the futures markets, but I will do that in the underlying. So if I was really interested in swing trading in indices, I would just you know, buy or sell the ETF. But I do a lot of swing trading. Yep, that's right.
Okay.
I do a lot of swing trading with individual stocks, and I find that it's a nice balance. That's kind of how I got my start in terms of trading. When you start with trading off of daily bars, it really forces you to slow down. You got to wait for the entire day to close before you can really make an assessment on, do I want to buy, sell, or hold my position? And it forces a lot of good habits. And so in the first year or two, I only was swing trading, and then I began day trading after that.
What time frames do you use for trading the E-minis? I'm curious how short term you go.
Yeah. I'm using a 512 tick chart, and it's not a very popular chart. Most people are using, you know, a 3-5 minute 15-minute, a time-based chart, and that chart is on the right here, and just by looking at my screen, there's not a whole lot of differences in the look of the tick chart versus a time-based chart. But essentially what's happening is, instead of 5 minutes going by and then a candle closing, if I was to be using, say, a 5-minute chart, the 512 tick chart is closing after a certain number of trades occur, in this case 512. And so in a time period like right now, where the markets, the NYSE is not open yet, the candles are going to form slower. There's not as many trades occurring. And so one candle might take a minute to form on a tick chart. But as soon as the market's open and there's a lot more trades occurring, then all of a sudden the candles are closing really quickly, and a candle might be forming in 5 or 10 seconds. And so it has a little bit of a volume element built in, just by seeing the speed of the candles forming.
Interesting. So kind of the speed that it's happening will kind of give you the feel for directionality.
Yeah, the speed helps determine, are there a lot of players in the market, or is there a lot of liquidity, or are things just very slow and not likely to get follow through and a lot of participation.
Okay. And you're a big believer. I see you use fibs in your trading.
I do. I'm really, what I'm using is the 50%, which isn't necessarily a Fibonacci number, but I'm just using the tool to get an idea of, okay, I want to first establish, is there some sort of trend occurring? And then if there is there an opportunity to jump in that trend, not by chasing it after it's been easy to identify, but get in that trend after we've made a pullback, and maybe people are starting to look in the other direction, and I can kind of sneak in and put on a position as people aren't looking.
Okay. How do you manage risk?
So I always use stops on my position, but more importantly, I like to create sort of a safety net with a daily and a weekly stop loss, or sort of a loss limit, because a lot of people focus on the entries, and sure, with day trading, entries can be important, but what's more important is to be able to manage trades in good markets that we might have a lot of follow through. You get in a position and it really runs in the direction that you put on, but also be able to manage positions in very choppy and challenging markets where you put on the position, it only goes a point or two and then reverses. And so being able to identify those conditions that make up those two, I'm generalizing, two types of markets, by managing the number side. And so all of that management really starts with, okay,
where are you wrong? Where are you wrong is the first question you answer. And based upon that, you kind of look for entries, and the less you have to risk to find out if you're wrong, at times it's a better entry. Is that it?
That's exactly it. Looking for
I'm a
places.
mind reader. I'm crusted.
That's looking for places for the market to either continue direction or break down and be changing direction, and using those points as entry points. And then if I'm in a trade, they would kind of flip and then be exit points. And so both managing a position from letting the market tell me, okay, this is the point to get out, as opposed to just putting an arbitrary, I'm going to trail my stop by 2 points when I get in the trade. I'd rather look for, swing lows and swing highs in places that the market has pulled back and then moved beyond that level as a way to place my stops. But then kind of the next layer of that is, I need to make sure that I'm managing my positions based on the numbers, so that if things start to get wacky and all of a sudden, trading's just not going well for whatever reason, I could be having a bad day, or the market's just not really conducive to my setups for the day or for the week. I need to be able to identify that and stop the bleeding as soon as I can, because there's going to be plenty of good days, and even if they only occur 30% of the time, a great big range trending days that you get in a trade and the market's moving 10 points in 5 minutes. Those days are easy to trade, but if you don't have any capital to trade them, then you're going to be sitting on the sidelines.
Yeah. So I'd like to wrap it with what is most frustrating to people. And I think a lot of it has to do with them probably using too much leverage. And that's being right the market, wrong the trade, where, they're right about the idea. They're not giving their trade enough breathing room because they're too over leveraged, or their timing's just awful. How do you avoid that? And I know it still happens to me where my stop will get picked off and then the trade will work. What's your method for trying to minimize that?
So I like to use the 512 tick chart for my entries sort of in conjunction with some of the larger time frames, and sort of pick out areas where there's likely to be a lot of activity, whether it's a prior support and resistance area, or a breakout area making a new high or a new low on either the day or the week, or a major high and low. And by looking for those areas, then I'm able to place positions that I feel like have higher reward, and I'm taking a calculated risk as opposed to just placing any old position in the context of maybe a less ideal environment. A traditional hammer candlestick, for example, means a whole bunch of different things depending on where it's at in the daily trend. If it could be at the top of a trend, it could be at the bottom of a trend, it could be in the middle of a range. And so as you're, just like you'd be in the trading pits and looking at the guy, across the pit from you and trying to read his emotions and what he's doing and what typically those signs mean, you're looking at the chart and sort of
you're looking for market tells, right? Messages.
Yeah, exactly. And so looking for opportunities to put on a position where the market's more likely to gain follow through, or let's generalize even more than that, putting on trades in a market that is likely to have better follow through, as opposed to an inside day where we have an FOMC meeting announcement in the afternoon. I'm very apt to just not trade that morning because I know that people are going to be sitting and waiting, and there's probably not going to be a breakout or any sort of movement that I can actually capitalize on.
So you really propose or are a proponent of being flat into red events like the Fed, like NFPs. You're flat.
Yep. Yeah.
Me too.
Yeah, definitely.
Tim, really a pleasure talking to a pro like you.
It was really enjoyable talking to you as well. Thanks for having me.
Yeah. So I know people could follow you on Twitter at eMiniMind. Any other way that people that heard you today could get in touch with you?
Twitter is a great place. You can also check out my website, eMiniMind.com. Lots of free stuff about my trading strategy and mindset and just sort of becoming a high performer. I find that I do a lot of things outside of trading in athletics and working with my hands and carpentry and things like that. And there's a lot of parallels. So it's always nice to talk with other traders and get to know people outside of their trading, because you can bring a lot of skills into trading from the rest of your life.
Yeah, and always nice to have a community of like-minded people to
absolutely
collaborate with. When I was a young guy with a big ego, Tim, I would only want to know what other people were doing so I could fade them.
Yeah.
And after I had my teeth kicked in a few times and grew up, a great network of traders that have different skill levels and different methods is an invaluable asset to me. And
absolutely.
Listening to you edified our community in faith today. So you're stuck with the new title. You're one of Dale Pinkert's Trading Warrior Brothers.
Well, I appreciate it. It was a pleasure chatting with you.
Thanks so much, Tim. I appreciate you getting up early on a Monday and spending time with us today. I wish you and your family, a great holiday season, and may pips rain down on you like snowflakes where you live.
Likewise.
All right, buddy. Thank you, Tim.
One.
All right, buddy.
All right. Bye.
So Tim Reset at eMiniMind, same, and that's also his website. And we'll see everyone for Turnaround Tuesday. Enjoy the rest of your day. And most of all, remember, don't just count your pips, count your blessings. You're very welcome, Forex Gal. And we'll see everyone tomorrow. Adios. Thank you, Tim.